So Archana Chaudhary, what about GST? So like mentioned, this 5,250 rupees per SFT is the all-inclusive price that we pay to the builder per the flats. Okay. Taxes, registration charges, stamp duty are additional. Okay. Taxes, registration charges, and stamp duty are additional. Our additional cost during this step of investment is a 0.6%, approximately 0.65% stamp duty that we have to pay for the registration charges, and GST 5% is additional. But GST 5% would be recovered back once we sell these flats to our buyers, because all the home buyers are aware that GST is mandatory, right? So when we sell our flats at the end after 2 to 3 years, we recover whatever GST we paid at the initial step, and we recover that from the buyers. So your initial 30 lakh includes all this. The Gautamar, so from where is your company incorporated? Our company is incorporated in Hyderabad, and we have companies both in Hyderabad and Bangalore. Mayank, is HUF allowed? Absolutely, yes, Mr. Mayank, HUF is allowed. We had multiple investors in the past who had invested via HUF. The thing is, excuse me, so a HUF cannot become a partner directly on the partnership deed, rather the karta of the HUF. All right. So the karta of the HUF, the fund will come from HUF's account. PAN number on the agreement will be HUF's, but the karta of the HUF will join the company as a partner, as a representative of the HUF. The HUFs can absolutely invest, but it is the karta that has a legal representative status. So, Mr. Vijay, minimum lock-in period. See, the holding period for this particular project is 2 to 3 years. Okay, so this is the holding period, but there is no lock-in period as such from an individual investor standpoint. I mean, see, this is a complex question. There are 2 to 3 ways in which you can look at this. So firstly, we have a 2-year non-compete clause with the builder. Okay, a 2-year non-compete clause, so that we just don't dump these flats in the market after a month or two. So see, builder has given us so much discount, right? So if there is a greedy investor, he can just dump these flats at 7,000 in the market, which would impact the builder's sales and overall project, right? So there is a 2-year lock-in, only after which we can sell these flats to our buyers. Okay, and also this 2-year is a good time for the investment to make sure for it to give us the maximum possible returns. The 2-year is a holding period, but from a fractional investor standpoint, there is no lock-in as such. And if anyone wants to exit for any reason, any personal reason, an exit is possible, but please note, exit is not immediate. Okay, so let's say there is someone, Mr. Vijay wants to exit after 3 months. Let's say you want to exit after 3 months for your personal reasons. So what we'll do is we will put your share for sale in the market. All right, we'll put your share for sale in the market, and the rate at which you sell your share is your choice. So our platform has thousands of new investors signing up on a monthly basis. And like you are aware, we list projects in multiple cities. So let's say we have a project in Hyderabad then. So there might be a Bangalore investor who would want to buy out your share. So the price at which you sell your share is totally your call. So let's say if it is, and practically, let's say it's an immediate exit after a month or two, you might not be able to get the returns. But let's say the holding period is for a year, you'll be able to factor in the profit that you would have made via selling the flats. So next, Akshay Puruti, how many projects the builder has delivered? The builder has delivered over 5 projects till date, and they have 8 projects in the pipeline under construction at the moment. So Mr. Kapil, how do you make money in the process? So we get a commission from the builder from every transaction that we facilitate. We get a flat 3% commission from every investment that we facilitate. And also our profit is not at the investment step itself. We don't charge anything from you investors on day one. Okay. But during exit, there is a 3% fee. All right. So this 3% fee is used to generate, is used for marketing expenses and like mentioned for the marketing campaigns, the 25 to 30 lakh marketing budget that would cost us. So our profit is in 2 steps. One, profit commission from the builder when we facilitate this investment, and other profit when we give you guys the exit. So next question, Mr. Rohit. How about the case where few flats are left unsold for any worst case scenarios? Please hold on, guys. Just give me a minute. Yeah, sorry. So what if there are any few unsold flats in a worst case scenario? So very good question. We get this question regularly. So one point you guys have to understand is in real estate, it is not a question of not getting sold. Okay. And especially in a city like Bangalore, where there is more than 2 crore plus population. Any property can get sold and will be sold provided if it is priced right. So the question is not about selling. The question is about selling at your desired price. So let's say the market at that particular point is at 9,000 per SFT. But if you are the owner and if you are targeting or if your quote is at 9,500 per SFT, 500 more than what the market is selling becomes really tough. Okay, it's practical. It's not practical, right? Because buyers will have 100 other options at a lower price. So selling at a price more than market price is very challenging, and that is when things would get complicated. So now let's say we are selling at market price. Let's say the builder is selling at 9,000, we are quoting at 9,000, and we are selling at on par price with the builder. In such a scenario, it typically takes us around 2 to 3 months to sell off the units because we are selling at this correct price, right? Now let's talk about a positive scenario where I'm underselling the builder. Let's say a builder at that point of time is selling at 9,500 per SFT. All right. I list my project at maybe 9,250 rupees per SFT to grab the buyers, to generate more sales, to liquidate, to make my liquidation easy. So if I'm selling or underselling the builder for maybe slightly 2 to 3% or 4 5% lower than his current market price, my sale would become very easy and I'll be able to sell the flat in less than a month. So the question is about not being sold because of the huge population in a city like Bangalore, and buying a own house is in our Indians' blood, right? So the moment someone hits 1 lakh salary, their entire family would push him to buy a flat. So residential market is not going to go down anytime soon in the next few decades, and these are very affordable flats for a middle class buyer. So selling is not a challenge. Getting the right price that you demand is the challenge. And again, like mentioned, that is why we have a voting system, so that majority gets to decide what price a property has to be sold. But again, let's say you are a private investor, you are investing for a full flat, it is your call as to what price you would sell because the holding is totally in your choice, right? So next question, minimum growth guaranteed, exit process, and assistant expected. Mr. Vijay, like mentioned, there is no guarantee in this. Okay. I mean, we are being very honest. We are a very transparent company. Unlike other platforms, we don't like bluffing people, telling unrealistic things. But whatever we speak is pure logic. Okay. And that is how we have run our business till date, and that is how we'll continue to do further. So now let's talk numbers and let's talk logic. How much profit can someone expect from this particular investment? Like mentioned, the builder is currently selling this at 8,250 rupees per SFT. Worst case, let's say someone is ready to close a deal in a week, he might sell it at 8,000 at the most. So our acquisition price is 3,000 rupees lower than builders today's selling price. And we can only sell this after 2 years. We'll hold for 2 years until the project is fully complete. So real estate is an appreciating market and the prices of properties appreciate post construction. Right. That is how the market has worked for multiple years, right? For many decades now. So even this project post construction, the builder says the price will get to 10K, but let's say we sell it only at 8,250 rupees per SFT. That is today's rate. Let's take away the appreciation factor aside. Let's put it aside. So even if you're selling at today's rate, you would make approx 57 to 60% profit in 2 years. Worst case scenario, let's say we undersell. Okay, we have to sell it at a lower price than today's market, and that would generally not happen in real estate, right? Would you sell your home at a lower price than today's market rate? No, right? You would wait out for a few months until you get a right buyer. So, but let's say you sell it in a worst case scenario at a lower price. So 50% minimum is what you can expect from this particular investment. And on the higher end, if you factor in the appreciation and multiple developments that are happening, like mentioned, Godrej is coming up with a 50-acre gated community just beside this project, okay, which is sold by Modern Spaces. So best case scenario, this can get anywhere between 9,500 to 10,000 is what you can fetch from this investment. Exit process, I think, I mean, I'm not sure if you have seen the webinar. If you missed this part of the webinar, we'll post a recorded session on our YouTube channel once this webinar is done. And please ping your investment consultant, that is our team with whom you're in touch, and they would share you the webinar link, or you also can go to our YouTube channel to see the exit process and how we execute this investment. So, Mr. Venkatesh P, in which floor will we get the flat allocation? Any floor rise charges? Mr. Venkatesh, if you are a fractional investor, okay, investing 30 lakh or 50 lakh, so our share would be spread across the tower. So this is a G plus 14 project, and our flats will be located in entire from right from first floor to the 10th floor, okay, or at least 7th to 8th floor. So our allocation would be diverse across all flats, and there are no floor rise charges if you are a bulk investor. However, if you are a private investor, okay, and if you're looking to invest more than 1.2 crore or invest for the full flat, yes, there you have the right or option to select a flat of your choice, and floor rise charges will be applicable then. All right, it will not be 5,250, but the floor rise charges will be nominal. So if you are investing in a flat that is over 7th floor, any flat over 8th plus floor, the floor rise charges are 150 rupees per SFT. So this is all you have. There is no east facing charges or corner charges. If you are taking a flat, any flat below 8th floor, any flat below 7th floor, so it is 5250 per SFT. Any flat above 8th floor, it is 150 rupees per SFT is your all-inclusive price. Rohit, are these assured returns? Rohit, like I just mentioned, it is pure logic, it's pure math. For discounted acquisition is what ensures our investment performs, and that is the reason why all our investments are doing really well. We have done 6 projects till date. We have given 2 exits, and all our projects have exited at around 18 to 19% IRR. So, Mr. Mayank, what is the transfer process? Yeah, transfer process is very simple. If you want to transfer this to someone from your family, you just have to sign a limited set of documentation. But there is a transfer fee of 15,000 rupees, which is not to our company, which has to be paid to the auditor for MCA filing fee. So this transaction, entire transaction is registered with MCA, Ministry of Corporate Affairs, the government body that oversees company law in India. So all the partners in this company, the shareholding pattern, their ownership ratio, everything has to be updated to MCA. In case there is a transfer within family, we have to do an MCA updation again. And these are MCA filing fee and our auditor's fee. 15,000 is the charge if there is a transfer within family or within your known circle. Let's say you sell it to someone from your known circle. So these are the transfer charges. So Mr. Ankur, explain about registration process. Does this happen in register office? Obviously, a registration means it is done in the register office, right? So we would go to the register office and the flats would be registered on your SPV's name, your special purpose vehicle that is doing these investments. And once the registration is done, you'll be able to take EC. EC is an encumbrance search or encumbrance certificate. It is a government portal that is given for public record. So once the registration is done, if you enter the project details, all right, and the flat numbers, it would show that the flats are registered on our company's name. Would the builder sign? Obviously, yeah. And you'll be getting a copy. Investors will get a copy of that. Akshita, Bora, what will happen if you are not selling the flat? See, Akshita, if you are a private investor and if you want to retain a flat, private investors will have the option to retain their flats. I mean, for as long as they want, you can get the flat directly registered on your name, and you can also stay in it if you want. But if it is a fractional investor, let's say there is some set of investors, let's say there is some set of 10% of investors who are super bullish, who are expecting the prices to appreciate even further. So the maximum holding period of this particular property or for this particular option is 3.5 years. Okay, so we have to exit this project in 3.5 years. So within 3.5 years, if you investors are not able to come to a conclusive decision or a conclusive price, and if you want to continue holding, so you'll have to transfer the flats from the company's name to your direct name. All right, and if it's a fractional investor, so what our company will do is post 3.5 years, we sell these flats and we can sell this for any price of our choice, provided we are able to fetch 21% profit on a per annum basis. 21% on a per annum basis. So if you calculate it on a 3.5 year tenure, that would be approximately 75% profit. So let's say we are able to fetch 75% profit in 3.5 years. Our company has the right to sell off the flats, liquidate the assets, and give your money to you. Okay, so we can't hold this for eternity, right? So 3.5 years is the max cutoff. But again, the catch here is 21% per annum returns have to be given to you investors. That would sum to approx 75% on the total investment value. So what is the UDS percent? I think the UDS percent is approx 40% of the built-up area. The next question, Mr. Gautam. See, Mr. Gautam, the previous, okay, let me just explain the two types of investment partnership that happens with builders. The first type of investment partnership is called a fixed return deal. Okay, where you go to a builder, say, I'll put 10 crore. How much profit would you offer me? In what time you would offer me? Okay, let's say the builder says 12 crore in 1 year. That is 20% profit. 14 crore in 2 years. 15 crore in 3 years. So that is what determines your basic ROI. So in a fixed deal, you invest X amount, the builder offers a Y% or a Y% profit, and your exit is predetermined. The second case is a variable deal. All right, in a variable deal, what happens is you go to a builder, you put 10 crore, you take Y% share in the project or Y SFT. So selling this share is your choice. All right, selling your share is this choice. You get to choose when to sell at whatever price you can sell. And in a variable deal, there is no buyback as such. So what happens in a fixed deal is, even in a fixed deal, the builder would give you a share in the project, but he would take a buyback agreement. All right, a buyback agreement where the builder would buy your share back after a predetermined period of time and would pay you a fixed return. So any appreciation that happens in the project is basically cut off, all right? And the builder gets the appreciation part. So let's say I'm investing at 10,000 per SFT. Okay, a project that is currently at 10,000 and I have acquired at 5,000 per SFT. So let's say my deal with the builder is 50% in 3 years or 50% in 2 years. So that would mean my exit price is 7,500 per SFT. So what happens in a variable, in a fixed deal is the builder has this buffer, right? Or the appreciation that kicks in. And for this appreciation, the builder would honor a buyback. So in a variable deal, there is no buyback link that is attached. You get to sell whenever you want and at whatever time period you want. So fixed variable, it is your choice as to which type of project that you invest in. And till date, we have done almost 4 fixed deal projects, and this is our second variable deal project. So going forward, we would only be doing variable deals because that is what our investors have been asking us, because real estate is basically an appreciation based market, right? So in fixed deals, what is happening is the appreciation is being cut off. So after surveys from multiple investors, everyone is wanting a variable deal, and the results are clearly visible. So we are almost percent funding in less than 10 to 15 days of our launch. So going forward, it will only be variable deals. Maybe 6 months down the line, let's say for a change to cater to our wide set of audience, we might do a variable deal. So these are the two types of investment partnerships: a fixed deal, a variable deal. So both are investments only. Okay, you're taxed as an investment, your documentation is an investment. A fixed deal is usually available in a late stage project, and the variable deals are usually tough to crack. But the reason, like I told, we have this variable list deal is because of our 150 crore commitment with Modern Spaces in the next 6 months across all their projects. So yeah. So Sudhir, how do we want? I already answered this. We get a commission from the builder on every transaction that we facilitate. Mr. Gautam, who is regulating your company? See, this is a very common question that we get. So company law is governed by MCA. All right. But if you talk about regulatory bodies like SEBI, regulations apply if you are dealing with securities as in shares and debentures. All right, shares and debentures. So in this form of investment, you are acquiring a share in a SPV, that is a partnership firm. You are basically buying a property and selling a property. So real estate doesn't come under SEBI purview, but since the fractional ownership space has grown crazy in the last 5 to 7 years, like I mentioned, all the online players combined have sold over 10,000 crore worth of properties via this model. SEBI has regulated this space the last 1.5 years ago, and what they have done is they have introduced a new form of SPV or a new type of company called SM REIT, okay, which basically means a small and medium REIT. But SM REITs again are for commercial properties, for rental income generating commercial properties. They do not apply to residential properties. So SEBI has conducted an all-platform meeting in Bangalore, in IIM Bangalore last year, approximately a year ago. After SMDAs were introduced, SEBI has told the platforms that this SMDA is an optional model. So the companies are free to choose whatever model that works for them. So the advantage of an SMDA is your shares will be immediately listed on public markets. All right. So the shares that you hold in this particular SPV are tradable and they are listed on the stock market, but the minimum ticket size again is 10 lakh. But if someone is looking for an exit, it's still, I mean, you'll still have to contact the platform, right? Let's say you put your share on stock market, a random guy is not going to come and buy it, right? So they'll approach the platform to find out all the details about the property, the rentals that they're generating. But this is a positive step that is introduced to boost fractional ownership because SEBI sees fractional ownership in the future because of the prices at which properties currently are at. I mean, they're sky high, right? So owning a full property will become very challenging in the next decade or so. So fractional ownership is the way forward. So that's about it. What if the construction is not completed on time? So this is a very common question most buyers ask. Like mentioned, this particular project was launched only 1.5 years ago. Or let's just let me show you a video. I'll just share my screen again. So I believe you guys are able to see. So this is the Engrace Vista project, which was uploaded exactly 1 year ago. That was in April. Okay, so in April, this is how the project was. As you can see, there is nothing and basements work was happening. All right, and if you are aware of constructions, basements typically take almost 6 to 9 months to complete, and that is the toughest part. So this video was shot in last April. All right, and we invested with Modern Spaces. And right now, if you see our current video, you'll be able to see all villas behind this project as well. So we invested with Modern Spaces in last August, September, and our exit happened last month. And when we went there for our exit for the registration cancellation, we were surprised to see the builder finish 3 towers 100%. We were surprised by his speed. We were in fact super impressed by his construction speed, and that is the reason why we have tripled down on our investment value. We have invested only 12 crore in our first tranche. So we were pleasantly surprised by their speed, and that is the reason why we are investing 30 crore. So this particular builder is highly famous for his construction speed. Okay. So if you check his track record, I mean, you'll be able to analyze the speed at which the builder finishes his projects. And also this particular project has over 150 crore construction finance from Bajaj Finance. Okay. So that itself is enough to finish the construction. And also the project has good sales velocity. The project is almost 60% sold out of the 394 flats that are there. The builder has sold almost 220 flats and approx 150 to 170 flats are remaining, which they'll construct or which they will finish in the next 12 to 16 months. And also, like mentioned, worst case, even if Bajaj loan is not fully sufficient to finish the construction, which it would, but to answer your question, in a worst case scenario, the builder has 250 acres of land bank. All they have to do is just sell maybe a couple of acres or 3 acres if they ever fall short. And so, which flats and which floor and which tower? Mr. Srinivaslu, the flats will be spread across multiple floors. They'll be diverse, the location is diverse. And our units are allocated in Tower 1, the main tower that is facing the road. Mr. Rajesh, project name is Engrace Vista. Mr. Rajesh, you can, we'll have a recorded session uploaded on our YouTube channel. Please ping your investment associate, someone whom you're already touched with. They'll directly send you the link post this webinar. So, Mr. Nalluru, how do we handle exit people with respect to documentation? So let's say, I mean, see, like mentioned, it is a bulk exit. The target is to sell all the flats at once. Okay. Like mentioned, there will be a 2 to 3 month marketing campaign. We'll collect UOIs from advances from investors in this period and sell all the flats at once. So your exit for every investor happens more or less at the same time. Unless there is some minority who wants an early sale at a lower price, the 1 or 2 odd flats, exit happens at the same time. And for minority, the exit process usually is you have to sign a resignation letter and an exit agreement once your payout is fully done. So it is a one-to-one agreement that happens. And also there's a third agreement called a partnership deed, which has to be signed by all partners at once. So if someone is exiting early, this supplementary will have to be signed at the end. So that's about the documentation. Mr. Shahjahan, what are the risks involved? Like mentioned, this is a very low risk investment opportunity. This is just like buying a flat for yourself. If you have the potential to invest, capability to invest 1.2 crore, you can directly buy on your name. If not, you can join the fractional route and invest in this particular opportunity. So it's a late stage opportunity, like you already saw. The construction is almost 60-70% complete. So the risk is very low. Theoretically speaking, from a project level, we don't see any risk. But if you have to talk about macro risk, let's say there is another pandemic, market slows down, job loss because of AI. So think from a macro perspective, there are some risks that are there, but from a project level, we don't see any risks that are there. See, Mr. Rajat, what if Fabinvest does not remain in picture after 3 years? So if Fabinvest is not in picture after 3 years, the project is still on your SPV's name. It is not on Fabinvest's name. The project is on your company's name, and you will be able to sell these flats at whatever price you want. And another point you have to notice, the founders of Fabinvest, that is me and my co-founder, will be in these companies at a personal level. All right, also at a personal level. So we are liable to stay in this project. See, there are two types of partners in this SPV. The first is a general partner. The second is a designated partner. So general partners are more or less like sleeping partners, that is you guys. Designated partners are the founders of Fabulous. So we enter these companies at a personal level, right? So the liability stays with us at a personal level, that we have to sell these flats, we have to give you guys exits. In case the designated partners are exiting for some reason, we have to nominate other designated partners. So we cannot exit unless the property is sold. So Fabulous is a separate company. Let's say something happens to our company is out of business. So this particular investment is irrespective of Fabulous because our liability is personal. All right, so we have to stay there until all the flats are sold. And this is clearly documented in the agreement. Mr. Eric, there are no discounts on private investments, Mr. Eric. You have to understand the discount that is being offered is only because of the bulk investment that is happening. All right. So if you are a private investor, you'll only be joining us and the flat will be registered on your name. So this discount or this discounted acquisition is for the 30 crore investment. It is not for the 1 crore that you're in. So no further discounts. It's a fixed deal and it's a fixed price that you get. Yeah, Mr. Bhaskar, Bajaj has funded this project. Bajaj has to give NOC. Yes, you're absolutely right. Bajaj has to give NOC and we will only register these flats after Bajaj gives its NOC, and Bajaj is already aware of this deal and they have agreed to give the NOC. So, Mr. Ansari, Rera, see, the legal of this project is very clean. Like mentioned, RERA is there, all the documents are clean. That is the reason 7 banks are offering APFs, right? Banks have already done the due diligence. If there is some defect to the property, banks will not offer loan in the first place. Why would a bank want their money to get stuck in a bad property? Okay, so APF is there for almost from 7 banks. See, Archana, GST is only paid once. All right. So GST is not twice. GST has to be paid only once. So since we are paying this GST now, so my deal with the buyer would be base price of 9,000 plus GST. So the all-inclusive buying price to a buyer would be inclusive of GST. So GST would come directly to us. It need not be paid because we are paying it upfront. Harshit, like mentioned, this is a 150 crore commitment that we have offered to the builders. We'll be listing almost 6 to 7 opportunities of theirs in the next 12 months, various stages. There'll be some risky opportunities, short-term investment, long-term investments, lower ROI. So this deal is only possible because of the bulk investment that we have committed and long-term association that they see with us. So that's the reason this deal is so sweet. Modern Spaces is already selling 50 plus acres. See, Modern Spaces, like mentioned, they have 500 acres in total. 150 acres is already consumed. Other 100 acres, they are selling to national players. 24 acres, they have given to Loda. It is a JV. That 24 acres is a separate project. There is no connection between this project. Any profits that they make is confined to that particular project. The second, why have they sold 50 acres to Godrej? They have enough land bank, right? They won't be able to construct on all the 50 acres. They are just monetizing their land bank. And most importantly, when a company like Godrej launches a mini gated community, or 50 acres is huge, right? There'll be at least 2,000 to 3,000 units, 2,000 units minimum in this 50 acres. So that would increase the value of their adjacent land bank. They still have 250 acres left here. So a player like Godrej coming, starting a massive gated community would increase the price of their existing projects, would insanely increase the price of their existing land bank. So it is a very calculated decision that modern spaces have taken, and that is only to increase the net worth of their other assets. And also from the 50 acres, they would buy more land, right, on the outskirts. So they are in the land game. Akshay, prop share, I think is your question about. So yeah, they are in the SM REIT business. So like mentioned, SM REITs is for commercial properties only. It does not apply to residential properties. And SM REITs is for a property that is worth 50 crore or more. So anything less than 50 crore or any under construction or residential property, you will have to go via the SPV route only. So Mr. Suman, what are the tax implications on returns? So like mentioned, this particular investment is LTCG efficient. All you have to pay is 12.5% tax on the profit that is made, and that's it. The whatever profit, see, let's say 30 crore is what we invested. The company makes 50 crore, exit is at 50 crore. We made a 15%, we made a 20 crore profit. So 12.5% on our profit is what we have to pay at company level, and balance of what is left is tax free in the hands of you investors. Okay, there is only single taxation, 12.5% is all you have to pay. Mr. Akshay, I've already answered your first three questions. So how do we get in touch with other investors? Yeah, you can get in touch with other co-investors. If you want to connect with someone who has already invested, we will connect you with our investors. So what is my background as a co-founder? I'm basically a doctor by education, all right, and a medical doctor, all right, and not an MBA guy. But my family has been in this real estate investment business for almost 2 decades now, and I have been personally involved in this space for almost 10 years now, including Fab Invest. So prior to Fab Invest, I have invested in almost 12 projects at a personal level in a span of 8 years, and I'm thoroughly aware of all the, both me and my co-founder, okay? We have been in this business for over 15 years cumulative, and we are thoroughly aware of all the ins and outs, and that is how we started this. So like mentioned, this is something, this concept is very, very famous amongst HNIs, because all celebrities, politicians, big shots, people sitting on large sums of money, they put their money only in real estate, right? Not other asset classes, because this is one asset class where there is no risk to principal. If the other asset class, the market can fluctuate, your price can go down. But in this form of investing, there is no risk to your principal because you're acquiring something at a discounted price. So it's only profits that you see, provided you invest with the right project, right builder, and if your due diligence is right. So what we are doing is we're just fractionalizing these HNI investments and making it accessible to retail investors. So Srinivas, we'll upload the webinar recording. Mr. Funny Bhushan, hi Mr. Funny. So Mr. Funny is a two-time investor in Fab Invest. So the question, see, Mr. Funny, the options are diverse. Okay, we have 26 flats, right? I just can't ask the builder to give me only east facing, only west facing. So it's a diverse allocation across various floors. We'll have both east and west floors in various flats. So flat details, yeah, we'll be sharing it when the drawdown notice is shared. But if you are looking for a private investment, we'll be able to share it to you much prior. Maybe we can share it to you today as well if you are looking for a private deal. So, Mr. Sandeep, is a bank home loan available for a investment? Yes, a bank loan is available, but the thing is, 80% is what you have to pay. See, it's already 40% discounted, right? So 80% is what you have to pay today. Maybe 15 to 20% is what you can take from a bank loan as on today. All right. So if you want to go for a bank loan, that option is also there. Please call our team or discuss with our investment consultant. We'll show you more details. Who will pay the marketing cost after 3 years? See, there is a 3% fee, like I told you on the webinar, a 3% fee that we charge when we facilitate this exit. This 3% is to facilitate all the expenses involved in the sale process. So we have to spend around 30 to 40 lakh on marketing budget. So that would be recovered from it. We have to pay our employees, sales guys for this. So this 3% profit on the exit price is a flat fee that would be charged on the exit price. Also, it is not just that Fab Invest has to sell all these flats. The builder also has given us an option to sell these flats after 2 years. So the builder, if we pay him a 3% commission on the selling price, builder also will sell this. Also, we have a network of almost 200 channel partners in our group, and any channel partner bringing in a lead. So again, it's a 2 to 3% commission. So this 3% flat fee will help us in our exit process. So yeah, so this 3% would cover all the marketing costs, expenses, everything that was involved. Yeah, Mr. Derek, if we invest the property in our name, yes, obviously, yes, you're investing this through us, right? So you'll have our support and we'll help you with managing the property or we'll help you with the sale process. Even if you're doing a private deal on your personal name. See, in case of emergency, how do we sell? Is it pro rata? Mr. Vijay, in case of an emergency, like I mentioned, uh, you have to sell your share to your co-investors, but please note, it will take at least 2 to 3 months to get an exit. Okay, we like being realistic. We don't overpromise. Don't assume you can sell in a day or sell in a week and get your money back. Please do not invest your emergency funds. Just keep something left for emergencies. In case a premature exit is needed, you'll be able to recover in 2 to 3 months. That can happen and has already happened with our previous investments. So 2 to 3 months is for your exit process, and what price you would fetch basically depends upon the timing of the exit and the investors who are applying for your share. Okay, so let's say you are exiting after a month, you won't be able to get pro rata because it is more or less an emergency, right? So at that point of time, maybe you'll have to give an additional 1 to 2% benefit to the investor who is replacing your share. But let's say you're selling after a year, yes, that is when after 6 months to a year, where your investment has matured a little, that is when you'll be able to capture this pro rata benefit. But as a company, what we try to do is we try to set a price for your share that is practical, realistic, that can be sold so that there is a balance and this transaction, this exit happens. So, Mr. Vikas, it's an LLP that we form here. Will be able to exit. See, Mr. Arun, there is a 2 year lock-in. There is a no compete. You can't sell for 2 years. Or if you're selling before 2 years, you have to go to the builder and you have to deal with the builder so that you don't dump this flat in the market or undersell the builder. If you take for a full flat, yes, you can keep it for yourself. You can make this your home. You can stay there, live there. You can do whatever you want. Mr. Santosh, what if all flats don't get sold? Like I told you, selling is not at all an issue. The issue is at what price we will sell and at what time we will sell. See, let's say 2 years is our target. If not 2 years, it will get sold in 2 years, 3 months. If not 3 months, 2 years, 6 months. 2 year 9 months. Bangalore is a massive city, and these are very beautiful flats, spacious flats. Every flat is 2,100 SFT, and if you already are aware of Bangalore real estate, you only have small homes, right? Typical 3 BHK is 1400, 1500. Small rooms, small flats. These are spacious flats at a very good price. There is no way these flats will not get sold. The question is whether we sell it at 9.5, 9,000, 8.5. That is the question. Let's say your expectation is more than the actual reality. That is when delay happens. Let's say we are underselling the builder or we are selling for a 200 to 300 rupees less than market price. Sale is never an issue in real estate. So Vijay, do we own specific flats in a specific units? See, if you are a private investor, you would own a particular unit that is locked to you. If you're a fractional investor, your share would be spread across all the 25 units that are held by the company. So you have share in all the units that are held by the company. So Mr. Gautam, like mentioned, we are an LLP. So this is an SPV that we incorporate. So this is a special purpose vehicle that is incorporated for this purpose. Please research about fractional ownership. If you are hearing this for the first time, it is a 10,000 crore market, and every player that is there, they follow a SPV model. It is either it is a private limited or a LLP model through which they invest in a particular property. So, like mentioned, it's already been there for 7 years. Very famous, is very stable, legally accurate. You can research about this post this session. If you have any further doubts, you can connect on a Google Meet with any of our consultants, and they'll be happy to answer you any questions that you may have. So, Mr. Okay, but how much GST on 30 lakh? See, the GST is not on 30 lakh. The 30 lakh is all inclusive of everything. All right, there is no further GST on it. The GST is on the 5250. It's not on this 30 lakh. So 30 lakh is the all inclusive price that you have to pay for one slot. Mr. Durga Prasad, I want a brochure. Absolutely, yes. Please contact our team. Please consult your investment consultant. If you're not in touch with someone, just go to our website, call us. Someone would send you all the details that you want. In case of default by builder, what default are you talking about, Mr. Krishna Chaitanya? We are buying these flats. The flats are registered on my name. Okay, you mean the sale deed, right? See, if at all there is, see, our sale deed, our sale agreement would say 100% consideration has been paid. See, as per law, sale deed can only be done after OC is obtained. right? As per RERA, as per law, sale deed cannot be done before a flat is ready, because with sale deed, you give possession of a property. How can you go and stay in an under construction project? Okay, that is invalid, right? Legally, it makes no sense. Sale deed can only be done after OC is obtained, and this is the process for any builder, barring small builders who go out of law, who follow deviations. Any big builder, any Cat A builder would never do a sale deed before OC, because that again is a case on them, right? They are deviating the rules and regulations. So a sale agreement is what you have, and our sale agreement says 100% consideration has been paid. There is no further legal payment related liability from our end, and builder will do a sale deed within 30 days upon OC is received. So this is a straightforward process. In case the builder, for whatever reason, refuses to do a sale deed, all we have to do is just file a case with RERA, because my agreement says 100% consideration is done, right? So the straightforward process, it will not take time. And no builder would typically do this, because builders also run on a, I mean, it's a game of reputation. If a builder refuses to do a sale deed for any buyer, that would blow out in the market, and that would hamper all their other project sales. So yeah. See, Mr. Suman Babu, 30 lakh is all you have to put. There are no hidden charges. There is nothing. So any profit projection that was shared in this particular investment is based on your 30 lakh investment only. That is including everything. So how can we get this recording? Shivashankar, you'll upload this to our YouTube channel, or contact our investment consultants. They'll share you. So I'm just trying to answer the questions quickly, because there are a lot of questions. So please don't mind my speed of the answers. So Mr. Soham Reddy, the 3%, that's at exit, not at day one. We don't charge anything from the investors on day one. This 3% at exit is to facilitate the exit itself. All right, so selling 26 flats is not small task. Like I mentioned, we have to get in at least 250 site visits, 2,600 pitches. That would cost a significant amount of money, approximately 30 to 40 lakhs. So this 3% will help us recover all this money. And also, once the flats are sold, there is a significant profit left for us, right? So our interest also logically stays until the end. So 3% is on the exit price. Yeah, Mr. Vijay. See, Mr. Sri Prakash, do we have any buyback scheme from the builder to guarantee 18%? This is a variable deal, Mr. Sri Prakash. This is not a fixed deal like our previous investments. See, even on a fixed deal, being practical, okay, the builder, there is no guarantee to anything. All right. It is only logic, and the math should make sense. Even in our fixed return deals, what we try to ensure is, from the buyback price, the builder should have at least 15 to 20% margin. And when you calculate this on a 10 crore or 20 crore corpus, let's say the exit price is 20 crore. All right. And there is a 20% margin that is left to the builder after he pays my money. So it is for that 3 crore or 4 crore extra buffer, the builder would care to pay me back. In case something goes wrong, there is delay, builder is unable to pay, there is nothing we can do. This is a business, this is an investment. So even in a fixed return deal, you'll be left with a share that you have to sell in case builder does not buy back. Does not buy back. So even similar in a variable deal, but what happens in a fixed deal is your return is capped. So you won't be able to take or benefit from appreciation. In a fixed deal, there is no appreciation. In a variable deal, there is, I mean, you'll be able to benefit from appreciation. So if you're specifically looking for a fixed deal, we have a project in Hyderabad. I mean, the project is already done, but there is one investor who is in some emergency who is looking to exit. If you're looking for a fixed deal, so please contact our team, and they'll pitch that particular opportunity to you. There is only one slot available in that particular opportunity. So Mayank, what is the annual fee? So there's no annual fee. We don't charge anything. What is the hurdle rate? What is the carry? So exit fee, like I mentioned, is 3% of the total sale value. There is no annual fee that we charge, no hidden charges. 30% all inclusive is what you have to put. And whatever sale proceeds that we make, 3% minus is what we give to you. This 3% can be to Fab Invest, can be to the builder, can be to the channel partners. So this is the total cost of selling these units. See, Mr. Rajsimha, yes, when we sell these flats to the builder, sorry, to the buyer, the builder, Fab Invest combined have to register to the end buyer. So builder alone, like mentioned, the flats are registered to our name, right? Builder cannot sell this to anyone else. So it is a tri-party agreement where both Fab Invest and builder sell to the buyer. So sale deed happens via a tri-party agreement. And also, like mentioned, there's a 2-year no compete clause, so that we just don't dump these flats in the market up per month and crash the builder sales. So 2 years of the holding period, 2-year locking, post 2 years is when we can sell these flats. Miss Vasavi, can we hold the flat? Absolutely yes. If you're a private investor, you can retain it. Can NRI invest in this project? Absolutely yes. We have a lot of NRIs investing with us from a long time. See, sale report from any agency Mr. Sri Prakash, if you want to check the sales velocity, you can just visit the builder's office, check the project, and do your own survey. Builder currently at the moment is selling around 12 to 15 flats every single month out of the 400 flats that are there. They have already sold 600 flats, sorry, 60% flats. That is approximately 220, 230 is what they have sold. They are still with around 170 plus flats. The sales velocity is approximately 12 to 15 flats per month. So Mr. Durga will be uploading this in the next 1 hour once the session is fully done. Private investor via Fab Invest or full flat. See, private, Mr. Suhas, if you want to choose, see, if you are not in Bangalore, you do not have the time to come for registration, if you do not want to have the headache of managing this flat, selling this flat on your own, what you can do is you can invest via Fab Invest. Okay, you can invest via Fab Invest, where the partnership deed would clearly allocate a particular flat on your name. For example, flat number 501 on Mr. Suhas. So 100% rights on this flat belong to Mr. Suhas. Likewise, Suhas will not have any rights on any of the 25 flats that holds are held by the company. Likewise, the other fractional investors will not have any right on 501, and they will only have rights in the other units. So we have this demarcation in the agreement. So the benefit of doing via Fabulous is, so we will have the responsibility of selling it on our, I mean, via our marketing campaigns. So this responsibility is legally locked to some extent. Whereas if you're doing it on your personal name, we would still extend our support as a goodwill gesture, but legally you can't commit us, or we are not locked to sell the flats after the exit. So it's up to you as to what you can choose. This is just like buying a flat for yourself. If you're buying a full flat, I mean, if you bought a home, you wouldn't have thought about selling it, right, at a particular rate at a particular time, and you obviously would have the confidence of selling it. So it's your call. It depends on each individual investor's preferences, be it private or via Fathomless. Mr. Vijay, I think you have missed the webinar. All these are answered in the webinar. We'll upload a recording. Please check there. See, Mr. Chetan, you mean the builder buying back or Fathomless buying back? In fact, builder has offered a buyback deal for this particular project as well, because our previous deal with the builder is a fixed deal, all right, at 18% ROI, and builder wanted to do a buyback in this particular option, but we were firm that we wanted a variable opportunity because of the numerous reasons that I told you. Godrej coming up, Lodha, all big builders, and this area is growing crazy. So we wanted to list a variable project, a good variable project where there is ample scope of appreciation. So if we offer a buyback deal to the builder is happy to buy this back, but we do not want to do a buyback deal in the near future because, uh, I mean, though on paper it might sound secure, both are more or less the same, because if a builder defaults, we have to sell it. Even in this case, I pay a 3% commission to the builder would sell it for that 3% commission. So the exit, the rest that are more or less similar. So there is not much difference between a fixed and a buyback deal. So yeah, so going down the line, next 4 5 months, we intend to do all variable deals, because till date we have done fixed deals. Mr. Sujay, what guarantee about our capital investment? Mr. Sujay, you are buying a property at 40% discount. See, what is the guarantee on your money? So that is your question, Mr. Sujay's question. So, like mentioned, you are buying a property at 40% discount. So basically, your money is being converted to a physical real estate asset that is worth at least 60 to 70% more than your investment value. Okay, you're already at profit. It is just that you'll need to wait for 2 years to realize this. Your money is going into real estate asset. Just like you're buying something on your personal name, you're buying it via a group. In case you have the capacity or potential to invest for a full flat, you can do it on your name. In case you're doing it via a group, it will be via a group. So your money is backed by asset, a physical real estate asset that is worth at least 170% of your investment value. So yeah. Mr. Soham, I didn't get your question. What do you mean by if the bulk flats are allotted, that will impact our ability? Can you please repeat it again? So, Ms. Vasavi, this is an LLP. Fabinvest will be the signing authority, not bank. Bank will only be the disbursal, right? So it is our platform that manages all these assets. We currently manage over 100 plus crore worth assets, and our properties are located in Hyderabad and Bangalore. So Fabinvest also will have we will invest one slot in every opportunity that we list generally. UDS, Mr. Hanuman, that's 40% of the built-up area. Archana, yes, we'll be one of the investors out of this 100. Again, Mr. Eric, there is no discount on private investment. I think I'm seeing this question for the third time. See, you're already acquiring this at a significant discount. Okay. Please do not think about the 50, 100 rupees margin additional discount that you're looking at. This is a very, very rare opportunity. 30 crore didn't get us this deal. It's a 150 crore commitment that got us this deal. Okay. So I told you all the factors that are happening, all the developments. Godrej is just coming up just beside this. They will launch not less than 10,000 per SFT. All right. And in 2 years, they will have an under excavation project at 10,000. We will have a finished product at 10,000. You will make a minimum of 75 profit from this investment in a very quick span. And I don't think there is a better investment. You can get a better investment than this, especially where your investment is so secure and when your investment return is so predictable. Ankur, I've already answered this. We are entering this. I mean, the founders of Fab Invest enter these SPVs at a personal level. So we are personally liable. Okay, the liability is legal. We have to stay in this project. Let's say something happens to Fab Invest and we are out of business. Fab Invest company can get shut. But the n number of SPVs that we have, so the 7, 8, 9, 10, whatever SPVs that we have, we are in it at a personal level. So we are legally bound at a personal level to liquidate this, give you guys your exit. So yeah, and these flat, every SPV is a separate unit, right? Even if something happens to us, your flat would still be there, the construction would still complete, your profit still, I mean, you would realize your profit. See, Mr. Suman, to answer your question, this is fractional ownership. Like I told you, we are buying properties, selling properties. There is no guarantee of return. Okay, we are not guaranteeing that you'll get X%, you'll get Y%. So fractional ownership is already a 10,000 crore industry. SEBI has already regulated this. For 2 years, they have tried to introduce new concepts. They have introduced SMDs and they have left the companies as it is because they have seen that whatever model we are implementing is fully secure and standard and there are no risks involved in it. All right, so that is why they have left an option for the platform to follow whatever model we are following, right? Because the SMDate was introduced a year ago. If SEBI had a problem with whatever model we are doing, they would have asked us to stop this model, right? But they have allowed all the platforms to continue and every platform is continuing. So it's not a one single company that we are doing something. It is a 10,000 crore market already, and we are just one of the multiple companies that are in the space. See, Mr. Vinod, why can't everyone approach Fab Invest? Mr. Vinod, we are not, see, ours is an investment platform. If you have noticed, we have not mentioned the project name on our website. So this is only being revealed on webinar or on calls. So a regular buyer would not look for investments. In case there is a someone regular buyer who's looking to buy a flat from investments, this opportunity is very limited. Like I told you, the pre-book price is only for the next 2 to 3 days. Tuesday night is when this would end. So anyone coming after this, it will be 5,500, and that 5,500 post-launch or post-book regular pricing also will be only for a period of 15 days. If any actual end user comes across this opportunity in this limited span, comes across our Fabinus platform, yes, maybe yes, they can approach Fabinus and buy a flat for themselves. But the chance of this is very rare, right? So it's our investor basis, people who are looking at alternate investment options, people who are looking to grow their money. Our investor base is not regular buyer base. So yeah, so what is the difference between buying a property from the builder and buying it? There is no difference as such if you are buying it from the builder or through Fabulous because we assign our rights to the builder and at this particular price, the deal would only happen if we assign our rights. So we get the rights first, we transfer our rights to private investors. Yeah, very good question, Mr. Suman Babu Nalluru. Currently in Karnataka, we are unable to register sale agreements due to Khata issue, which we will get only after OC. So this is a very crucial point, and this is one of the main reasons why we didn't launch a project in Bangalore in the last 6 to 9 months. Okay, there is a Kata issue that is happening, and registrations are not happening in most parts of Bangalore. Okay, registrations will only happen after OC is obtained, occupant certificate is issued because that is when the end units get a Kata number. But BMRDA apartments do not have this issue. If at all a project falls under BMRDA regions and if it is a BMRDA approval apartment, then registrations are happening. Again, for villas, this is not happening. Villas are plots. Only for BMRDA apartments, registrations are happening. So what this has done is this has basically cut out our overall projects. So out of the 50 plus projects that we have received, at least 60% are non-BMRDA. So, and we generally do not invest without a registration because that is when you're legally secured, right? You're able to, I mean, it's not that the builder would do anything wrong, but legally, when there is so much money involved, we have to protect ourselves in every way possible. So, yeah, BMRDA apartments registrations are happening, and this project registration will happen. Akshita Bora. So, very good question. Do we see working with grade A builders like Prestige, Godrej, Purvankara, such kind of builders in near future? Uh, Akshita, we have worked with a builder named Cyber City in Hyderabad. Our previous project was done by Cyber City. Cyber City is one of the top 5 builders in Hyderabad, and they have delivered over 5,000 plus flats in there. They are more or less equal or bigger than Purvankara. Now, coming about builders like Prestige, Godrej, they are at an altogether different level when you compare with Purvankara Modern Spaces because Prestige is a public limited company, right? So Prestige market cap is approximately 80,000 crore. If you have to work with Prestige, the returns will not be this high. All right. The discount will hardly be 10%, 15%. We are currently in talks. Okay. We are currently in talks with Soba from the last 2 months. All right. Soba has a project in HSR near the Agara Lake. So their current selling price is 20,000 per SFT. Soba selling price. Soba is also a public listed company, but not at Prestige level. So 50 crore is what the dealers or the talks are going on for. And Soba is hardly offering us 10% discount. 18,000 is what they say they'll give us. But what Soba's pitches, they say Soba generally dictates the price, and within 3 years, by the time property completes, they will set the property at 25, 26,000 per SFT. This 20, 25,000 is non-existent as of today. They are offering you only a 10% discount. All right. So any appreciation or that they promise, we'll have to blindly go by the builder, which may happen, which may not happen. So we do not like, see, if I list a project with Soba, we'll even do 100 crore in 2 months because that is the pull that a big brand has. But what benefit does that do to my investors? Okay, you guys are investing in us. People would have been following us from many months, right? So I don't want to just list a project just for the sake of business, just to show numbers and ultimately give very minimal value to you. Let's say I get in the Soba project at 18,000. What if the prices don't hit 25,000? It is non-existent today, right? My model is based on a discounted acquisition on today's prices. Appreciation may happen, may not happen. There are n number of factors that determine appreciation. Maybe government policies, developments happening in a particular area, macro factors beyond our control. So my model is to acquire a property at a significant discount on today's price at 30 to 40%, flip it for a 50 to 60% in 3 years, and reinvest is my concept. If I invest in something like Prestige and Godrej or even Lodha, the quantum has to be very high. Okay, maybe we have to start at something at 100 crore, 200 crore, and the discounts and the returns would not sound this lucrative. Modern Spaces is a Cat A rated builder, like I told you. They are the youngest entrant into the space. They have delivered very good projects, and typically there are multiple builders who have been in the industry for 20 plus years but are still not Cat A. Modern Spaces has gotten into this Cat A status in less than 10 years, so that should show how good builder they are and how solid their growth has been. And this particular project, see, it's late stage. It's not just Prestige, Godrej, or Brigade that have made Bangalore what it is today, right? They hardly constitute what? Not even 5% of entire construction activity. There are many standalone builders, small builders. Like I told you, there are 500 or even 1,000 plus builders in Bangalore, out of which you know 5 names that are famous of, and they are obviously at a very big scale, much bigger scale. I think Prestige at the moment has over 1 lakh crore worth of projects under construction. They operate at massive scale. So if you have to work with Prestige, the returns will not be lucrative, and the quantum has to be at least 200 to 250 crores. Modern Spaces at the moment, like I mentioned, is doing a JV with Lodha, and 250 crore investment is what Modern Spaces have put for the land, and they have given it to Lodha for development. So yeah, we'll get there one day, but it will not be via buying flats in an approved project. It has to be super early stage where we buy the land, we buy out a land Prestige is looking at and give it to development for them. That is when the returns would sound lucrative. Mr. Eric, yes, please, you can go and check the project. Already a lot of investors have went. So do let us know when you want to go. We'll arrange a meeting and someone from the builders team would assist you and show the project in detail. The project will be ready by 2027 December. Like mentioned, NOC from Bajaj would be given. We will be sharing the NOC before. Token of 1 lakh to be given, balance amount. Mr. Bhaskar, token of 1 lakh has to be paid if you want to pre-book. The pre-book is open until Tuesday, so you can book anytime before Tuesday and pay the 1 lakh token. So once whatever subscription we hit Tuesday 7 p.m., that is when the pre-book closes. So we communicate with the builder that we'll be acquiring or paying money for X number of flats, let it be 15, 18, 20, whatever that is. So once we get a date from the builder, we send you a drawdown notice that registration is going to happen on a particular date. So once we send the drawdown notice, that is when you'll have to pay the 100%, but this will more or less happen in the 10 days, in 10 days from now. If project completion is already at 70%, why? See, structural is different, interiors are different. So 3 towers are 100% structurally ready. 3 towers, the other towers are 40-50% stage. The entire structural work will take at least 9 months from now for all the 7 towers to complete. So once structure is done, interior works like plumbing, electrical, so they will take at least 1 year. So 2 year is what the builder has, and the 2 year lock-in is also for our mutual benefit. LTCG kicks in. If I'm selling, see, if I'm selling in 18 months, so 30% plus cess is what it would cost me. And in our quantum, the end result would be almost 40% in taxes. So 30% there is cess, right? So let's say our company makes 15 crore profit. So on 15 crore profit, almost 40% will go in profits. So rather, if you wait for another 6 months, so LTCG kicks in, and that is when this investment becomes tax efficient. Mr. Rajesh, there is no validity as to the registered agreement of sale. It's a misconception. Just please check again. You can keep a project on registered AOS for as long as you want. In fact, one point most people do not realize is 99% of all sales that happen in real estate are via unregistered sale agreements. Okay. Most builders or most buyers do not even register this because of the 0.6% additional cost that you have to pay for registration. So 90% of this happens on unregistered AOS, and registered AOS, there is no validity as such. Yeah, Mr. Manjuna, that is Modern Spaces. We'll be uploading this recorded session on our YouTube channel. You can just check it out, or you can ping your one of our investment consultants, and they'll share the link. Mr. Rick, it's not 17% IRR that you are looking at. You are looking at almost 21, 22, or even more IRR. So to 50% in 2 years is almost 24% IRR. Let's say this gets to 75%, the number only increases. So you're looking at somewhere between 50 to 75% profit realistically. Number can get even higher from the builder's word, but we strongly recommend our investors to come in, assuming the range is somewhere between 50 to 75%. Mr. Gautam, uh, please go to our company profile, see the projects that we have done. We already manage 100 crore versus, and once the drawdown notice is sent, the property's registration will happen in less than 2 to 3 days, or at the most, there is a 5-day window during which registration happen. Already 100 crore has flown through our company. We have various projects, and once the registration happens, you can check out in EC. Okay, where you can see that the flats are registered on our particular name. Mr. Mansoor, separate e-khata. See, Mr. Mansoor, the property is not on your name. The property is on the name of a company. Anything will be on the company only if you're a fractional investor. Mr. Shah Jahan, also same question. This is fractional ownership. Please check what fractional ownership is. The property is not on your name. The property is on a company in which you own a share. So your share in the company is equal to share in the property. Can we use this for capital gains for current property being sold? Mr. Arun, if your question was, can you use the capital gains money from your current property sale? You can use it provided you are doing a private investment. If you are investing in the company via fractional investment, you won't be able to use your capital gains money from your current sale. If you want to avail that, you have to go for a private registration. You have to go for a full flat where the flat is registered on your name. Then yes, the capital gains exemption, the 54F exemption can be claimed. Saurav Malik, can we ask about your investment deal with them? Like mentioned, you mean the percentage that we make, we get a 3% commission from the builder on day one uh, for whatever investment value that we do. And if you are asking about the total investment deal with the builder, so it's a 150 crore commitment that we have given across 36 of their projects. Can a private investment exit before 2-year lock-in? Like mentioned, Mr. Soham, if it's a private investment and if you want to exit before 2 years, you will have to approach the builder so that you don't put this out in the market. The builder only will sell this flat for whatever price you say, and he will give you your exit. So before 2 years, you'll have to go to the builder. Builder only will sell and give you your exit. After 2 years, you're free to sell on your own. So that's it for today, guys. I think it was a very elaborate session. The session almost lasted for 2 hours. I think I have cleared most of your doubts, and this is one of the most exciting and secure opportunities that we have done till date, and the profit potential is very lucrative. So from the builder's words, 10,000 per SFT is where the price would hit in the next 2 years. But on a conservative basis, we should be easily be able to attain 90% ROI. So that would give you approximately 70%. I think uh, this is one of the best investment options that we have done. And yeah, so if you're interested, you can go ahead with the UIs and sign up for the investment. The pre-book closes in 2 days. So any UIs before Tuesday 7 p.m. you'll be able to avail 5250. Post Tuesday, it will be 5500. The price entry price would increase by 5%. So your net return, so if you calculate the profit on your entry price, your net return also will be impacted by this another 60%. So your overall would decrease by around 7 to 8%. So see you guys. Thank you for staying with us until the end. We'll catch up next time.